we want to do earnings per share IAS 33. EPS, earnings per share. Now, earnings per share, we have basic earnings per share, and we have diluted earnings per share. All right. Now, the basic earnings per share, we are going to do when the company issues the share at full market price. We also learn when they issue a bonus issue. Or what we call capitalization. Or scrip issue. Then lastly, we look at right issue. Then, under diluted earnings per share, we will talk about a movement in separate class of equity. I.e., if you have a share that do not pay dividends, but in future, they will pay. In future, you have to pay dividend. So no dividend now, but in future, dividends will be paid. Then number 2, we talk about convertible loans and preference shares. We did those things in IFRS 9, if you remember, the convertibles. We will see its impact on the earnings per share. Then lastly, we will talk about options and warranty or warrants. Options or warrants. All right, so these are the angles we are looking at. Typical example of options is share-based payment, IFRS 2, and I know that my people in level 3 has actually watched the videos concerning that. But let me begin by striking that earnings per share is for listed companies. All right, it's for listed entities. But if you're a private entity, you can choose to disclose. So for private entities, we say that private entities choose to disclose earnings per share. All right, so these are the faces to earnings per share. Now, let's begin with the basic earnings per share, then finish off the class with the diluted earnings per share. All right, so basic earnings per share. Basic EPS. Now, it's a formula based. Don't forget, this is part of your ratio computations, okay? And so basic earnings per share, which is basic EPS, is given by profit after tax minus preference share dividend. Preference share dividend. Some people also call it profit available to ordinary shareholders. It means the same thing. So profit after tax minus preference shareholders, all divided by the weighted average number of ordinary shares. All right, in issue. All right, so this is the basic formula that you have. However, if you are doing it for consolidated financial statement, so please take note of this. In consolidated financial statement, your profit after tax here, your profit after tax minus preference share dividend, all right, will be your total profit, okay, minus the attribution to NCI. So if you know your consolidation very well, you realize that when you're doing consolidated P&L, whatever figure that you have, you share it between the NCI and the CI. The share attribution to the parent shareholders. That is what we do in consolidated P&L. So what you will need is that the profit after tax will be the one that is attributable to the parent shareholders. All right, parent shareholders. So that is what you apply. All right. Now let's do the full market. So this side would be, I mean, that's it. But as for your weighted average number of ordinary shares, it's still the same in the formula. All right. So now let's look at how full market operates. Issuing shares at full market. What do we mean by issuing shares as full market? It means that we are using the price of the share in the market. We are using the price of the share in the market. All right. So the only thing applicable here, the only thing you need to know for your exam purposes, what you need to know is that when there is share issue at the full market, the only thing you do is to apply timing. All right, apply timing to shares. All right, to the shares in issue. All right. What do I mean by that? Let's pick an example. So you apply timing to the shares in issue. All right. What do I mean by that? Let's pick an example and deal with it. Okay. So now we have this first illustration to look at. It's at full market. Look at this. Fidelity Company is a company with a called up and a paid up capital of 100,000 ordinary shares of 1 cedi each and 20,000 10% redeemable preference share. Also, all right. So we've already said you apply the timing, but so in this question we are told that the gross profit is 200,000 and the trading expense is 50,000. Fidelity Company is paid the required preference share dividend and ordinary dividend of 42 cents per share or pesos per share. The tax charges for the year was estimated to be what? 40,000. So that is that. Now, if that is the case, what do we say the earnings per share is? Earnings per share. So we are meant to calculate earnings per share for the year. So it's all about your formula, your ability to remember the formula. So basic earnings per share is equal to what? Yes, who remembers? But it's clear on your screen. So profit after tax minus what? Preference share dividend. All over weighted average number of ordinary shares in issue. All right. That said, what is our profit after tax? These are the information we are giving. The gross profit. So we look for our profit after tax. All right. So we are giving a gross profit of how much? The gross profit we are giving here is 200,000. We need to less our expenses. So the expenses, we less trading expenses. And that is given to us as 50,000. So it means that our operating profit is 150,000. But we can't go ahead straight and deduct tax because we know that there are preference share dividends we need to take care of. Now, how do we get our preference share? This is the preference share, and it is 20,000. So preference shares dividend. All right. So let's go by the way the formula is giving us. All right. So let's less tax. All right. So taxation. All right. So taxation is 40,000, right? So we have 40,000. That gives us like 110. Then we are not, we've not forgotten about the preference share dividend. So preference share dividend will be given by, this is it. So we have 10% of 20,000. So that gives us what? 2,000. Okay. And that, how much will we have now? So somebody should punch the figures and give us. So we have 108, right? All right. So we have our profit after tax. So, and preferential dividends. And we are told that they have 100,000 ordinary shares. So our basic earnings per share will therefore be given by 108 all over 100,000. All right. And that gives us 1.08 cedis per share. All right. So basically that is what we have. All right. Any question? Any question on this? So is the formula, you find the elements in the formula, then you slot them in. Yes. And this is a straightforward example. I'm going to give you another example, and we will use that, all right, to see in terms of when it is given to us in comparative years. All right. So let's use this example too. So let's say you have 2 years. Here is 2018, and this side is 2017. All right, so that's that. And you have earnings. The earnings here, let's make it 450,000. And this year it grew by, let's say, 550,000. Then we have ordinary shares. Ordinary shares. So let's make this side 800,000 shares. So this one is cedis, and here is 1 million shares. Then we say that on July 2018, July 1, 2018, the issue share, the entity issued share I mean, and the shares they issued were 200,000 shares. All right, so at full market. So calculate earnings per share for both years. All right. So how do we go about this? 2017, how do you go about this? Yes, any idea? 2017, how do we calculate our earnings per share? Yes, any idea? Augustine, what's the formula? Emmanuel, what's the formula?
The formula is the profit after tax less preferential, which is the earnings over the weighted average number of ordinary shares.
So in this case, what are the figures we are using?
So 2017, our earnings was 450,000.
450.
And our shares was 800,000.
800,000. So what would be our answer?
We'll have 0.56.
0.56 is money. Don't forget that per share. All right. All right. Now watch this. Watch how we do 2018. So in 2018, what will happen is that is where we learned that you apply timing. Okay. So applying the timing to the shares. Now what will happen is this. Now I want you to watch closely. All right. So in the beginning of 2018, 01, 2018, to the time before they made the issue. So listen carefully. The beginning of the year to the time before they made the issue. They made the issue in 2018 July. They made the issue in 2018 July. So, all right. So to the time before, okay, just the time before. So if the issue was made in July, the time before will be 30th June, right? 30th June 2018. Now, how many shares were there? So the number of shares that were there were 800,000 shares before the issue, 800,000 shares. Now, the 800,000 shares, this is what you're going to do. You should understand that the 800,000 shares existed to a particular period only. Now, the period for that is 6 months. And this is what we mean by applying the timing. So what you will get will be 400,000. All right, that is what you get. Then in July, they made an issue. So July 2018, according to the question, they issued 200,000 shares. So from July 2018 to the end of the year, which is 31st December 2018, we had 1 million shares. And that 1 million share also existed for what? 6 months. So that will also be 500,000. So here gives you 900,000. And so your basic earnings per share will be equal to what was the earnings? 550,000 for 2018, all over the weighted average of 9,000 shares. Please, so what will you get? What will you get? So 550 all over 900,000.
0.661.
That gives us 0.61 per share. Now, what you've seen here, the new thing that you have seen here is the understanding for you to get that the 800 shares, which was the balance carried down here in 2017, will last to the period there was a new issue. And the new issue was done in 2018. That's why July 2018. That's why the 800 shares now became 1 million at the end of the year. They issued one. So 800 shares lasted for 6 months, and they issued additional 200 to make it 1 million. And that one too will continue to the end of the period, 6 months. So I want you to follow how it has been done. Now, students argue and say, okay, sir, can I also say that the 800,000 shares was there throughout the year, which is 12 over 12. And therefore, we will have 800,000 shares. But the new issue of 200 lasted for 6 months. So that one will be 100,000, and we will still have 900,000 shares. I will say yes, and you can apply it to only full market. Don't use this practice when it is a right issue and bonus issue and those things. You may make a mistake, all right? But the best advice I can give you is that don't go this direction. No, don't go this direction. Always use this direction. And I know why. As we progress, you understand why I want you to go by this direction. Because when there is a right issue, the right issue will be based on this, all right? Or maybe this. So depending on the question. So please follow this path that I'm giving you. So 800 existed for 6 months before there was an issue. Then on that day of the issue, you bring in the issue, you add 1 million, then you do the remaining years. Okay, so the remaining months in the year. Now, so what I'm going to do is that I'm going to bring up another illustration or a question, and that one you guys will do it for me. Okay, so hold on. Let me bring the question. All right, so let's continue with the bonus issue. The questions will come. All right, so we've done full market now. Then we go to the number 2, bonus issue. Bonus issue. Now, what is bonus issue? So bonus issue, what happens is that the company will give shares to its existing shareholders, but will give it to them free of charge. Free of charge. Okay, it's free of charge. So what happens is that they will use their retained earnings to pay so that the shareholders do not pay. So what happens in bonus issue is that there is no change in the total equity. There is no change in the total equity. So key point number 1, when there is a bonus issue, there is no change in the total equity. All right. Okay, so that is that. So, I mean, you know that the composition might change, but there is no change in the total equity. Yes, so that is a key point. All right. So let me add the composition. It's changed. So if I had 1 share and you gave me a bonus of additional 1 share, I mean, my shares will increase, but my composition will increase, but everybody's own will increase proportionately. So there is no change in the total equity. All right. So what do we mean? The capital increases, but 2, what you learn is that the capital will increase, Capital increases because there has been issue of shares. Capital will increase, but no cash is collected. But no cash is collected. It was given to them free of charge. No cash is collected. All right. So there is no impact on earnings. Because no cash is collected, there is no impact on earnings. These are the things you learn about bonus issue. The key thing is that because of that, the numerator, which is the profit, hasn't changed, but the denominator, which is your earnings, your number of shares have increased because people have received additional shares. And so therefore, what will happen is that your earnings per share will reduce. Earnings per share reduces. All right. Key point is that whenever there is a bonus issue, the standard says that bonus issue are treated as if they have always been in issue. So bonus issue are treated as if they have always been issued. Always. Being in issue. That is the key bit you need to understand. If you miss anything at all, that is the part that you need to understand. That they has always been in issue. So the 3 steps you go into whenever there is a bonus issue, 3 steps. Step 1 is to calculate what we call bonus fraction. So you calculate bonus fraction. Bonus fraction, what I call the BF. Now, what is the bonus fraction? The bonus fraction is given by the number of shares that existed after the bonus issue divided by the number of shares before the bonus issue. So number of shares after the bonus issue all over number of shares before the bonus issue. So that is that. Now let me ask you a question. If there is a statement like for every 5 a person has, we will give him 1 share. For every 5 you have, we will give you extra 1 share. What do you think our bonus fraction will be? For every 5, we will give you 1 share. What would you think our bonus fraction will be? Yes. Yes. Emmanuel.
Okay, so it will be the 6 over 5.
6 over 5. And that's correct. Because if you had 5 and we will give you 1, it means that you will get 6 after. Then what you had before is 5. So that is the first step you need to go through. All right. Yes, that is the first step you need to go through. Now, then step 2 you have here is to apply the bonus fraction. The bonus fraction, the BF, to the opening shares. To the opening shares. i.e. the shares, existing shares before bonus issue. All right. So that is that. Step 3 is to calculate your normal earnings per share. Your earnings per share. Calculate earnings per share. And maybe let me add the step 4. Step 4 will be, EPS for comparative years must be restated. So restate EPS for comparative years. Comparative year by, okay, so EPS for comparative year must be restated. How do you do the restatement? You do that by multiplying the EPS, previous year's EPS, by the inverse of the bonus fraction. Okay, so in this case, the inverse of this one will be what? 5/6, right? So that is that. So watch it well. Step 1, calculate your bonus fraction. Step 2 is to apply the bonus fraction to the number of shares that is existing before the bonus issue. Step 3 is calculate your EPS. Then step 4 is to do the comparative year, restate the comparative year by multiplying the EPS of that last year over the with the inverse of the bonus fraction. All right. So this said, let's pick up an example and clear it off. All right. So we have this illustration. Okay. Now we have an entity that made a bonus issue of 1 new share for every 5 existing shares held on July 2018. Relevant information is that we have these profit attributable to any ordinary shareholders. So here we have 460, 550. Number of shares here we have 1 million and we have 1.2. We are asked to calculate the earnings per share for the year ended December 2018. Then we are also asked to calculate the prior year comparative figure as if it would appear in the financial statement for the year 2018. All right. So now let's do our 2018 earnings per share. We already know the formula. So it's the earnings attributable to the ordinary shareholders over the weighted average number of shares. All right. So that said, what is the weighted average number of shares? For the earnings, we do know is 550. But what is the weighted average number of shares? Step 1, they did the bonus issue. You saw it here. So step 1 is let's get our bonus fraction. So bonus fraction, BF. So what will be the number of shares that will be there after over the number of shares that will be there before? So yes, who can tell me from this statement? 1 new share for every 5 existing. So that is what Emmanuel gave us. So he said it's 6/5, right?
Yes.
All right, so we know our bonus fraction. Then we said that apply the bonus fraction to the number of shares that will be existing before the bonus fraction. So we start 01/01/2018 up to when did they do the issue? We had July. So here will be 30th June 2018, right? What's the number of shares that is existing? 1 million. And so up to this period, we have 6 months. So we will also multiply it by our bonus fraction, which is 6/5. So what will we get? Then Then what happens? There is an issue on July 2018. They said that, what was the bonus issue? They told us that for every 5, they will give them 1. Already there's 1 million that they have. So for every 5, they will give you an extra 1. That gives us like 200,000 shares. So we will have 1.2 by 6/12. Please, we don't apply the bonus fraction over here. If you remember what the principal said, apply the bonus fraction to the opening shares, i.e. the shares existing before the bonus issue. So the shares existing before the bonus issue is just the 1 million. So that is that. Learn that principle very, very well, because if you miss it, everything you do there will be wrong. All right. So that is that. Now, how much will we have? I can guarantee you that our final answer of the weighted average shares will be 1.2. So work it out. Let's see. Because this side I know will be 600,000. Because half is 600,000. So I'm expecting this side to also be 600,000. Is it correct? Confirm it.
Yes.
All right. Do you know why I know? I know because of this statement. It says that this is it. The bonus issue are treated as if they have already been existent. All right. They have always been in issue. So if that 200,000 is assumed to always be in issue, then it means that at the end of the year, we will still get the 1.2. So sometimes in the question, when there is a bonus issue, the question is just about a bonus issue. You may not necessarily have to go through this. You can just pick the figure here and use it. However, the trick is that if you don't do your bonus fraction, you can't do the comparative. So you have to do the bonus fraction. All right, so this one, our earnings per share. Our earnings per share will be 550,000 cedis all over our 1.2 million shares. And what will be our answer? Then get me the answer. Then when you finish, the B part said we should find a comparative. We said the comparative is multiplying the previous year's EPS over the inverse by the inverse of the bonus fraction. So previous year's EPS is 460,000 over 1 million. And that gives us, I think, 0.6. So if we are to restate it, multiplying this thing by the inverse of this bonus fraction, it will be 5/6. So now get me the figures.
So the first one, the 2018, earning per share is 0.45%.
It's 458, right? So convert it well. So it will be 0.46 per share.
46, yes, yeah.
And this one, that is
0.38.
0.38 per share. All right. Now, you see, if you don't take care, you would think that this 0.46 of the present year is the same as the 0.46 of the previous year. How can it be? It really doesn't make sense, because the number of shares have grown, the earnings too have grown. But if you want to do a proper comparative, you have to use the inverse of the bonus fraction to multiply the previous earnings per share so that you draw your comparative. And that is how you do earnings per share comparatives. All right, so that is that. Okay. So that is a good work. Now, you are the ones going to do this for me. Everyone get to work, solve this illustration. What you are doing is you are calculating the earnings per share for the current year and also the comparative for the previous year. So that is your question. Start work. You said 2012, you have how much?
0.16 per share.
0.16 per cedis per share.
Yes.
Then what about 2011?
So 2011, I had 0.15 per share.
All right. Is it the same as what Nibata gave? Nibata's 2012 is 0.20. All right. Augustine, are you also done?
No, sir.
Why the delay? All right. So basic earnings per share for 2012. All right. So as you see, it's solved. These are what you have. So we know that the earnings, what was the earnings? Before they had 400,000 shares and the bonus issue is 100,000. So this was not in the form of that statement. Okay. So what you can do is that their financial year ends 30th December every year per the question. It ends December, but the issue was done in September. So it tells you that if you want to go the other route, it will tell you that 2012, right? Two, they did this thing in September, so it will be end of September. That's where until end of September, it made a bonus issue. So let's say if even it's the end of September, so let's put here September 2018. Then on that same 30th September, the issue was done, 2018. So here, how many shares existed? They had 400.
400,000.
So you do, so there is nothing like bonus fraction because that statement didn't happen. But you can, if you want to, if you want to deduce your own bonus fraction, you can deduce it from the fact that they brought in, but it will be very difficult for you to capture that bonus fraction. So your 400 existed, all right. And so I told you that because you don't have a bonus fraction to work that side, all you need to do is to go on and bring in the new issue of 100 so that you have 500,000 shares. I told you that whenever there is a bonus fraction, you can actually use the closing balance, the closing balance earnings per share, shares that existed to do your earnings per share. You don't need to really go on and do the half year and the bonus fraction and all those things. But it is good you do, just so that there are questions that embodies bonus fraction, full market, right issue. So if you keep practicing that, that is what will happen. So you had your 400, you have 500,000 shares. Your earnings were 80,000, right? So this is it. Then you multiply it. All right. So that is what you get. Okay. So what now is the bonus fraction? If you know, like I said, you can still deduct take out your bonus fraction because bonus fraction is what number of shares that existed after. You could see clearly here that the number of shares that existed after is how much? 500,000. So if you wanted to do your 6/12, this one won't be 6/12, it will be 9/12, right?
9/12, yeah.
9/12. And your bonus fraction, you know that after the issue, the shares became 500. So your bonus fraction will now be what? 5/4, right?
Yeah.
5/4. Then this one will be multiplied by 3/12. So that
Yeah.
is that. Yeah. So if you can go ahead and do that. So if you go by that, how many shares will you get? This side when you multiply and this side when you multiply, how much are you get? So 9/12 multiplying the 400,000 all over 5/4. That gives 375,000 shares. Then the 1/4, which is 3/4, 3/12 by the 500. That gives you the 125. It still brings you to the 500,000 shares because it's bonus issued. Bonus issue. Yeah. So now you know that your earnings per share, your basic earnings per share, can be given by 80 all over 500. So you are right. I don't. So Nibata, you check how you had your 0.0, your 0.2. All right. Then the comparative. So you know your bonus fraction. Comparative last year is 0.185. Multiply by the inverse of the bonus fraction will give you 4/5. Yeah. So yeah, that gives you the 0.15. Don't forget to always put the currency sign there per share. All right, so that is that. That's all. That's all. Good work. Good work done. All right. Now let's move on to the right issue. How a right issue is conducted. A right issue. What is a right issue? So that's the last of the basic earnings per share. What is a right issue? Now, a right issue simply means that they are selling or issuing shares to their existing shareholders, but below the market value. It is below the market value. So it's a share issue. So right issue is issued to existing shareholders. But below the market price. So that tells you that, okay, let me ask you a question. If the market price is 5 cedis, the share price on the market is 5 cedis, then I give it to you at 4 cedis. What has happened? What do you see? What do you see? Paradigm, perspective. What do you see? Yes, the thing is 5 cedis. I've given it to you at 4 cedis. What do you see?
It's like they're giving to you at a discount.
At a discount, yes. And here the language you call a discount is what we call a bonus. All right. So what we call a bonus. Therefore, right issue combines the full market and bonus issue. So it had that characteristic. So what does that mean? So we said that in full market, we will bring in the proration of the months, right? In bonus, we will do bonus fraction. So it has that characteristic. So we are going to combine these two. Now, the same step you go through. Step 1 here, when there's a right issue, step 1 is to calculate right fraction. Step 1 is to do the right fraction. The right fraction, which I call the RF. Now, what is the formula for the right fraction? The formula for the right fraction is the price of the shares before the right issue. The price of the share before the right issue. Market price before right issue. All over what we call the theoretical XREF price. So theoretical XREF price, TEP. The TEP after the right issue. So after right issue. So it is the price before the right issue all over the theoretical XREF price. All right. So that is that. Okay. Now, let's take an example. I want to test you on this. All right. So if I say 1 for every 3, right issue, and that right issue, 1 for every 3 right issue at, let's say, 3 cedis, and the market price before the right issue is 5 cedis. How will my right fraction be? So right fraction will be the price before. The price before is 5, right? The right issue is 5. Now, if you do know the meaning of the right issue, you shouldn't mix up the prices. I just said that the right issue, okay, is the issue to the shareholders at a price below the market value. So you can never use the right issue. You can never pick 5 as your right issue. You can't. Because if you pick the 5, it means that you are picking something that is exceeding the 3. And therefore, it will tell me that that definition is not well understood. So you need to pick the right issue price is always lower than the market value. Why? Because we understood that they will issue shares to the existing shareholders at a bonus price. Okay, so that is that. So right fraction, the market price before the right issue is actually 5. Then the TEP, how do you do theoretical XREF price? Theoretical XREF price is taken out of the statement that 1 for every 3. Okay, so how do you calculate TEP? So this is TEP. The number of shares that existed before, okay, in this statement is 3. All right. That is the shares that existed before. And the price of those shares was 5. So that gives us 15. Okay. Then the right issue, what is coming in is 1. Is 1. Then the price of that one is 3. The price of that one is 3. So what then happens? I think my pen is freezing. Just a minute. All right. So the new one that came in is 1. So the person will have 4. Everyone that had 3 will now have 4. The price of that one is given to us at 3. And so that gives us 3. Now, theoretical XREF price. So here will be 18. TEP, therefore, is given by 18 over 4. That is your TEP. That is how you get TEP. All right, that is how you get the TEP. So 18 over 4 gives us 4.5. All right, so 4.5. So look at it carefully. So this is how you go around with your TEP. The number of shares per out of the right issue statement that you are giving. They said that for every 3 that you have, they will give you another one. So my old is 3. The new one that is coming in will come in. Therefore, every share I have will be 4. Okay, so when you multiply it by their respective prices, these are what you get. And when you divide the amount by the total number of shares, you have 4.5. And therefore, my right fraction, okay, will be given by, we had 5 before, all over 4.5. So that is my right fraction. Now that I have my right fraction, I'm going to use it and I'm going to apply it on the number of shares that existed before the right issue, just like we did the bonus issue. The number of shares that existed before. Okay, the number of shares that existed before. Okay, so if I have this, then we can take in if there are shares, we will use it and we will multiply it. Now, so you look at this illustration. Let's use it to build on this illustration. All right, so this one, okay, the illustration 5. The illustration 5 that you see. So I want you to look at this carefully because we are going to apply it now. Just take your time and look at it carefully. If you have any question, just ask me before we go into the illustration. Take your time and look at it. All right. Any question? Any question? All right, then let's look at the illustration and let's try. Okay. So an entity issue 1 for every 5 existing share at 1.5. That tells you that so long as there is a price attached to it, it's not a bonus. It is a right issue. All right. On July 1st, July 2018, the price, the pre-issue market price was 3. Okay. Now the relevant information has been given us as we see. We are meant to calculate the EPS for 2018 and also calculate the prior one, the comparative one. Okay. We know our basic EPS. We already know the formula. But we need to find the variables. So since it's the right issue, what we need to do is to do our right fraction. What is our right fraction? It is the price before, right? All over TEP. Price before, right issue over TEP. And the price before the right issue, they said that the pre-issue market price, pre means before, all right, is what? 3.00. Now, what about the TEP? So help me get the TEP. What is the number of shares that is existing? What is the price? What is the amount? The new one that is coming in, what is the price? What is the amount? The total for us to get our TEP. Yes, help me. Yes, who is helping?
Okay, so the existing, we have 2 existing.
2 existing?
Yeah. At 3 cities.
At 3 cities, that gives us 6.
6.
And then
yes.
the new one, we have 1
by 1.5.
at 1.5.
That gives us 1.5.
Yeah.
So this side will be 7.5. This side will be what? 3.
3.
So our TEP is what? 7.5 over 3.
Over 3.
What is that?
2.5.
What is that? It's what?
2.5.
2.5. So our fraction is 2.5. All right. So now, just as we did with the bonus fraction, So the number of shares for 2018, the number of shares that were existing. So we have 01, 2018 up to 30th June, or you can make it 1st July if you want. 2018. How many number of shares were existing? 800,000, right? And this share will exist, the period here is 6 months.
Yes.
And
the bonus fraction too is, what is the right fraction?
3 over 2.5.
3 over 2.5. So we get that. Then on July, the issue, July 1. What did the issue say? The issue said that for every 2 you have, they will give you extra 1. How many do we have here? 800,000, right?
Yes.
For every 2 out of that 800,000, there is 1. All right. So what would that be? 400, right?
100.
400,000. And that gives us 1.2. Then we multiply that one to by what? 6 over 12. All right. So how much do we have in all? The last aspect is 600,000. And this side, you do well know that we don't apply the bonus or the right fraction to this one, because we've said that they are applied to the number of shares before the right issue and not applied to the shares at the right issue date. We've established that already. You don't multiply it by the shares at the right issue date. No, you multiply the fraction by the number of shares that are there before the right issue. All right. So complete it. Let's get the completion of it. Yes. What will be here so that we can get the total? So
480,000.
it's what?
480,000.
480,000.
80,000.
Okay, so how much will it be? Is it 1080?
Yes.
1080 shares.
Yes.
1.80. All right. So our earnings is 550. So we have our number of shares. Oh, this thing again. So you can get the answer.
So we have 0.51 cedis per share.
0.51 cedis per share, because here is 1080. So we have 0.51 cedis per share. All right, so that is that. Now the comparative, you are going to multiply by the inverse of the right fraction. So 2017 will be what? 460,000 over 800,000, right? Multiply by the inverse. The inverse is 2.5 over 3. So that's all. Okay, so that's it. That's it. Now, that is what you've done. Now, what you are going to do for me is this last bit of this last question. You are going to do everything. Like you are going to do the A, B, C, and D. It sums up everything that we have done for today. Anyway, what is the inverse?
0.48 cedis per share.
0.48 cedis per share. All right. Now, what you are going to do for me is to solve this question, to let me know if you have understood whatever we are doing. Now, so take your time. I'm going to give you like 10 minutes for this. First, so we said Ruth Amlalo makes an account to 30th June each year. That's the accounting year ending. Then on July 2015, Ruth Amlalo has 500 million ordinary shares in issue. Profit for the year is 250. There were no preference share in issue. Now, calculate the earnings per share, assuming A, the share capital has not changed for the year. B, an issue of 50 million were done at full market. Okay. C, 1 for every 4 bonus issue at this date. Then D, 1 for every 5. All right. So all the best. I'm giving you 10 minutes. 10 minutes for that. Everybody, try your hands.
Number A, that's the A, I had 0.5%. And the B, I had 0.49.
All right, sorry. So you had 0.5 for the A. What about B?
0.49.
0.49. C.
I was on the C. I've not finished
Right.
this.
Who has done the C? Anyone who has anybody done the C? Augustine.
So I got 0.4.
The C.
Yes, sir.
0.46.
0.4.
0.40. All right. So Nibata says he has 0.40 for also C. What about D?
I'm on it.
All right. So it means you have to work on your timing too. You have to be fast. So if I look at the A, share capital has not changed. So earnings was how much for the year? Profit for the year was 250. And the number of shares is 500 million shares. So 250 million, 500 million. So you had 0. All right, that's correct. B, there was a full market on August. So if the financial year ends 30th June, then it means it starts from July, the previous year. Okay. So since profit for June 2016, it means that it started July. The year starts from July. So when did they make the issue? August. So to be July 1, 2015, they made the issue in August. So this one will be just 1 month. August.
Yes.
So this one was like 31st, 07, 15. It was a full market. So the opening will be 500 million shares. Okay, at 1 month. One over 12. Then in August, they did 550 million in addition, which means the 550 that we will have will last for 11 months. The question is separated. It's separated. So that's how come you are going to do it like that. So here will be 11 over 12. It's because the question is separated. So the next time we are looking at this, we will look at it differently. I'm going to show you how you do that. All right. So here was how much, and this side was how much. So you have 1 over 12 multiplied by 500. That one was like 41.67 million shares. And this one is 550 by 11 over 12. That gives you 504.16 or 17 million shares. So So plus 41.67. That gave me 545.84. Is that what you had?
Yes. So I
So
was.
So the earnings didn't change. So it was 250 million over 545.84 million shares. And that gives you 0.45 or 46. Yeah. But you gave me 49. Your B is 49. It should be. So if it's correct, it should be 0.46 per share. All right. So check that.
Yeah.
All right. Then the C is a right issue, a bonus issue. So bonus issue, bonus fraction, 1 for every, so it's 5/4.
Yeah.
All right. So then, and the thing was done on November. So you have 017/2015 up to November. So like 30th October, right?
Yes.
31st October.
Yeah.
Yes. So 3 months.
What is this pen doing? We have here will be 10, 15. And the number of shares that existed at that time was how many shares? 500 million.
500. Yeah.
And for how many period? July is 3 or 4.
4.
July, August, September, October, 4.
4
So
months.
12. Multiply by, you remember? Multiply by the bonus fraction, you remember, right?
Yeah.
5/4. Then November, they did the issue. So the November issue, they said that we had 500 million there. And they said that for every 4 we have, they are giving an extra 1. So how much did you get for that?
125.
125,000.
125. So 125
million
gives us 625 million.
Yes, sir.
And we are going to multiply that one by how many months? 8, right?
8. Yeah, 8/12.
So how much did you get?
416.
Can you lower the music small?
Oh, sorry.
This one is how much?
208,333.
208.333.
No, 333.
I want it in million.
Yeah, you get 208,333.
Yeah, I said write it in million. Or you don't get it. So it's 208.33.
3, yeah.
Because everything you have here is in million. Then the 625 will be 8/12, right? So that one gives us 416.67. So
Yes, sir.
together, how much are we having? So that gives us 625. It's a bonus fraction. It's a bonus. So the bonus, you know that certainly you get this one now. All right. So it will be now 250 over 625.
Yes, sir.
All right. So 250 by that gives us what?
0.40.
0.40. All right. So that is that. Did you get it?
Yes, sir.
Yes.
Yeah. Okay. The last one the D. So it's the same approach. What will be our right fraction? The theoretical XREF price, so it's 5, that is the old. Then we have 1. The price is the price of 5 and the price of 1. So the price of the 1 is given here. Then the price immediately before the issue is 1.4. So the price before is 1.4. And the price here is 1.25. I told you that you cannot make a mistake with these two because you know that every rights issue is given below the market price. So you should know that. So there should not be any way you should mix that thing up. All right. So TEP, what is the amount? Here I know it will be 1.25. Then what about 5 by 1.4?
7.
7.
It's 7.
Yes, sir.
All right. So we have 8.25.
25.
So 8.25 over 6 gives us how much? That is 1.38, right?
1.38.
All right, or 1.375. So our right fraction will be given by, what is the price before? 1.4. So 1.4 over 1.3. All right, okay, or 1.375, whichever one you want, right? So now the issue was done on February. So it means that when we start our July up to 31st January, July 2015 up to 31st January 2016 will be how many months? So we had 500 million before. How many months is that? Our fraction is 1.40 over 1.38. How many months is that?
So it's 1st January, right?
Yeah, oh, sorry, 31st January. All right, 31st January. Yeah. Then on February 1, the right issue was done. So 6 months plus 1, right? 6 to December, then 1 in January, making it 7, right? 7 over 12, right?
Yes.
Then on February 1, what is the right issue? They said for every 5. So we have 5 million. They said for every 5, we are getting extra 1. So that one will be 100 million, right?
Yeah.
That gives us 600 million. And that one will run for the 5 over 12. All right. So once we get that, we divide by. All right. So 5, 12, 600. This side is 250. What about the top?
The top is 295.89.
Yeah, 295.89. So when we add it, we have 545.89. All right. Then it will be 250 million cedis, all by 545.89 million shares. And our answer will be, and with all, especially the bonus, you can restate the comparatives if you want. All right. So this one will give us 250 by this. We have 0.46 per share. All right. So that is how it is. That's how you run by. Okay. Now, so that is basically that is it. Now, what you're going to do is to find out. You see, in an exam, the examiner can bring. You see, instead of making this one A, B, C, D, he can decide to remove all of them. So assuming there is no A, B, C, D, okay, and the question is all together as one question. It's all together as one. There is no A, B, C, D. So you have this issue. Then on these days, they made this issue. Then there is a bonus issue. Then there is a right issue. So you are it's under the assumption that there is no ABC. So all the question is one time. All right. So this is where I will have to go back to the past questions. All right. So just hold on. The question one. So look at this question. It says on January 2020, Kalimba had 2 million in issue. Then on April 2020, the company did a full market, 270,000 ordinary shares. Now then in July, the company now makes a right issue. This is the right issue. Then the fair value of the share on the last day prior to, so this is to help you with your right issue. Then in September, the company now make a bonus issue. So that everything is inside one question. Full market is there, bonus is there, right issue is there in one question. If it happens like that, what do you do? So the problem will always be to find your weighted average number of shares. That is it. Now, if the question happens like this, then it means that what you're going to do is to develop a table, and that is a table in your manual. If you check your book, you see that it is inside there. I've done a table there for you. That is where you need that table. All right, so we are going to solve this scenario, these types of questions. So what you do is that you're going to develop your table. Now in the table, you have your date, like we've been doing. Then put a place for narration. Then number of shares, like we've been doing. Number of shares, exactly what we've been doing. Then the timing. So the 6/12 thing that we will do, the timing too. Then your right fraction. Then your bonus fraction. All right. Then you get your weighted average number of shares. So that is how you set up your narration, because everything is inside one time. Everything is inside. Okay. So now let's get the fractions done somewhere. Because don't forget that when there is a bonus fraction, you apply the bonus fraction to the number of shares that existed before the bonus. And that when there is right, you apply it to the number of shares that existed before the right. That's why you see all the examples that we are doing here. For example, this one, you saw that this is the right issue date, but we applied the fraction only here. We didn't apply the fraction here. That is the right fraction. And it's the same thing for the bonus fraction. We applied it to this part. We didn't apply it to this part. So you apply it to the number of shares that exist before that issue is being done. All right. So now let's just do the fraction. Let's find the fractions. So let's use here for bonus fraction. And let's use this side to get our right fraction. All right. Now, per the bonus, how is the bonus stated? They said that finally on September 2020, they made a bonus issue for 1 for every 20. So it means that it will be 21/20. 1 for every 20. So it means our shares after will be 21, then before will be what? 20. So that is how we get that. So that is our bonus fraction. Then what about the right issue fraction? What is the prices? The company made a right issue for 10 for 10 at 1 for 10 at 2. So 10 and 2, right? So 10, the price of the 2 is 3.1. Oh, they said what? 1 for every 10 at 2. So the price of the 1 for every 10. So it's 10 and 1, right? 1 for every 10. So the 1 is priced at 2 and the 10 is priced at what? 3.1, right? You see that. Fair value at the last day, yes, 3.1. So this one will give us 31, and here will be 2. So we have 33 over what? 11. So our step will be 33 over 11, which is 3, right? Which is what? 3 over 1, kind of. Is that correct? 33 by 11?
Yes, 3.
3. So 3 over 1 is 3. Okay, so the right fraction will be what? The right fraction will be the price before, which is 3.1, and this one 3. So we've gotten our right fraction. So we know that our bonus fraction is 21 over 20. Then our right fraction is 3.1 over 3. So that is what you do down. Okay, then now let's start. Balance brought forward. How many number of shares existed on January? So on January, you have January 01, 2020. These were the number of shares up to the time there was an issue. So you bring your balance brought forward down. Okay. So the balance brought forward will last to when? Up to the time there is an issue. So it started in April.
April 30th.
We are doing everything here in December. Okay. We are doing here in December. Then they asked us to do the restatement. Okay. So December to April, right? 20. 30th April. So how many shares were there? 2 million.
2 million.
So 2 million shares. All right. So, I mean, this is our narration. Let's draw it well. This side will be like a balance brought down, and we have 2 million shares. Okay. So the timing will be how many months? 4 months, right? Is that correct? From January to 30th April.
Yes.
Yeah, 4.
4 months. So what is our right fraction? 3.1 over 3. And what is our bonus fraction? That is 21 over 20. So don't forget that we will apply it on these things till we get to the date the right issue is done. Then we don't apply those ones anymore. All right. Now, in that April 30th, let me just use April 30th. So 30th April 2020. What they did was a full market issue. So that one was 270. So 270, we have 2,270,000. All right. Now, you need to be careful because it's not like the first example we did that had A, do this, B, do this, C, do this, D, do this. No, it wasn't like that. This one is when everything is all together in one question like that. So now what is going to happen is that this one will last to when there was another issue. So this is 30th April 2022 when there was another issue which was on 31st July. So 31st July 20, that is when this balance is going to last for. So you count April, May, June, July. Is how many months? 4 months, right? So it's 30th April. So the April will not count. So it is when? May, June, July. So 3 months, right?
Yeah.
3 months, and the bonus right fraction will happen because the right issue hasn't happened yet, and the bonus too has not happened yet. So that is how you approach it. Then they tell you that on which date? On 31st July. That is when the right issue was made. So 31st July. Oh, sorry, 31st July 2020. That is when the right issue was made. Now, what is going to happen is that, so this one was full market. Narration is that it is full market. Then this one, we have a right issue. Now, what is the right issue? The right issue was that for every what? For every 10 you have, they will give you 1. So this is the shares they have. These are the shares. So what you do is that, so 2270, for every 10 we have in this, they are giving us 1. So that will be what? 2270. It will be what? 227000. Is that correct? 227,000. That's correct, right? So how much will our shares be now? How many would they be now? So you have 2270 plus 227 now. I have 2497. And this 2497 is going to exist to the time another issue was made. So it means that this is our 31st July 2020. When was the next issue? September, right? September 2020. Now, how many months is that? So this one started on 31st July, so it will be August and
2 months.
September. So 2 months. Yeah, 2 months. Anyway, after everything, it should be 12 months. Now, because it is a right issue, we won't apply the right issue fraction. Don't forget that. Don't forget that. Because it's a right issue, you don't apply right issue fraction. But you apply the bonus issue fraction, which is 21/20. Okay. Just as we've been doing, the time you multiply it to the number of shares prior to the issue. That is how it is done. All right. Then the last bit on September 30th, what they did was to do a bonus issue. And what was the bonus issue? For every 20, they will give you 1. Now, this is the share we have. So for 2497, for every 20, we get 1. So have you seen how different it is when the question is A, B, C, D, like distinct? All right. So this one, how much will we get? This by 20. Yes. How much?
124,850.
124,850. Okay. So when we add it up, what will we get? 249497. 2621,850, right?
Yes.
2621,850. And this was issued when? September. And so it's going to last for October, November, December, right? 3 months. So, I mean, our right fraction has ceased. So the bonus fraction too. This is a bonus issue. So we won't do the bonus issue there anymore. All right. So that is that. So now the rest is to get us the figures so that we can get our weighted average number of shares. So this is how it is when the question puts all of them together, not like A, B, C, D, that kind of thing. All right. So if I were you, the question that we did, I'll go back and remove the A, B, C, D and solve it all together. Okay. And practice this. So how much would this side be? So start getting us the figures. So it was 2 million by 4 months by 3.1/3 by 21/20. I have here, let me see. What I have here is 723. Please confirm.
Yeah, 723. 3, 3, 3.
723
3, 3, 3.
3 3. All right. What about the next one, which is 2270 by 3/12 by 3.1 by 21/20? 3.1/3. I have 61574. 74. What do you have? Confirm from your side. I am having 615 740 or 738.
Yeah, 738.
738, yeah. Then the next one, what I have 2497 by 2/12 by 21/20, and that gives me 436,975.
975, yeah.
Then the last one is 2621,850 by 3/12. So what I have here is 655 462.3.5, so it's 463. All right, so you can confirm that one too. So now we can now total our weighted average. Weighted average, so 436,975 plus 615 738 723 333. So what I'm having here is 2,431,509. All right, so that is that. So my basic EPS will be given by, how much is the earnings for the year? For 2016 is 400,000 all over 2,431,509. So what will be our EPS? What will be our EPS? So all I need to do is
0.164.
0.16.
16, yeah.
So 0.16 per share. All right. So ladies and gentlemen, that is it. That is the difference in when the question is ABC. Now we were asked to do comparative for 2019. We already know the earnings per share for 2019. So what you do is that you multiply it by the inverse of what? The bonus fraction, and the inverse of what? The right fraction. So that's all. So we have 0.186 multiplied by the inverse. So this one will be 3/3.1, and the inverse of the other one will also be 20/21. That's all. That gives me 0.17 per share. All right. So, ladies and gentlemen, this is it. This is all you need. This is all you need. Now, so there are similar questions like that. There is another aspect of, so the diluted earnings per share has also been examined before, especially those in corporate reporting. That's how they started the new syllabus. So you have a next section of this, which is diluted earnings per share. Nibata, have you been following? I don't understand why we multiply the issue at full market by the bonus fraction and the right fraction. Yes, we do. I've told you that the only point you don't use the right fraction is when there is a right issue. And the only point you don't use the bonus fraction is when there is a bonus issue. So any shares that existed before those type of right issue or bonus issue, you will use them. So that is the principle. So there are certain things we can't give you explanations only to the extent that that is what the law says. So if that is what the law says, there is nothing like a further explanation. It's like a law. I've told you that corporate reporting and financial reporting is a law. It's not mathematics. So that is what the law says, and that is what you do. That is it. So if you've been following when we started, you realize that we said that when there is a bonus issue, so it's the same thing. So I will ask that, okay, so when we were doing this one, okay, why is it that you were comfortable with we multiplying it here? But we never multiplied it when there was the right issue itself or the bonus issue itself. So till you get to the bonus place itself, any share that existed prior to that, you apply them. But so if I can deduce from your question, you don't have a problem when we started multiplying it by the balance, the opening balance, but you just have a problem when it was a full market, this one, but you didn't have a problem when we were doing it here and here. So until you get to that point where the right fraction is made, you will be using them. And until you get to where the bonus issue is also made, you will be using them. So you saw that when we got to where the right issue was done, we never used it. We used just the bonus issue. So if this here to, let's say, if the bonus one had come before the right issue, okay, if the bonus one has been before the right issue, we will be using the right issue, but I will not use the bonus issue. And when we come down, we won't use the right issue and the bonus. So I'm saying that assuming this one, per this question with this, so this one, the right issue came before the bonus issue. Okay. So if the bonus issue had come, we wouldn't have applied the bonus fraction. That is it. We wouldn't have applied the bonus fraction. Then we would have only applied the right fraction. But when we come down, if the bonus is the right issue is down, then we know that we didn't apply one of them here, so both of them will be gone. So right issue is there. We can't use the right fraction. Okay, and we didn't use the is it the bonus fraction we didn't use here? Yes, so we can't use. So till you get to the place where the thing actually manifested itself, or the bonus issue or the right issue was done, you will be applying it from that point, from the beginning coming. All right, so that is it. Okay, so that basically that is that. All right, please, any more questions?